Hey, well, good to see you back again. Welcome back to another of our little lectures on ACCA Paper P4, which I do my particular favorite. I have to do this one quickly, so I picked a nice quick little topic because we're actually going on holiday tomorrow. So this will be posted when we come back. Right, ACCA, when you look at the paper P4, it has the big questions at the front, and then you get the smaller questions at the back, which are worth 20 marks each. Now, what this is a particular topic, or what this particular question, which is called key lynch, which comes from the June 2012 paper. The first thing is that the question is broken into two. The first part is on the risks involved in opening a subsidiary in a foreign company. It's a topic that comes up all of the time, and you should have a fairly standardized approach to that on the grounds that most students of ACCA are actually in developing countries. It's a topic which is fairly straightforward. The second part is about dark pool trading systems for equity shares, and we'll come on and talk about that. What's really, really important when you listen to this, when you watch this, though, is that you understand the approach, because these questions that come up in the second section, which are worth 20 marks each, typically what happens is that students have hit these questions and they hit them when they've got 10 or 15 minutes left before the end of the exam. Because they're essay type questions rather than number type questions, it's actually very easy to get a decent chunk of marks on them. And what you must never do is you must never leave it blank, because if you leave it blank, you've automatically got nothing. If you write something which is common sense, you'll get something. So what we're doing is we're looking at this question. It's the June 2012 paper. It's called Key Lynch, and Key Lynch wants to open a subsidiary in a foreign country, rather. Standard topic for ACCA paper P4. Look at the approach all the way through this. Don't worry too much about the technical stuff, because you probably know enough to get 50% anyway. Look at the approach, okay? I'm going to say that again. Approach, approach, approach. That's what's really key here, okay? Now I have to work out how to stop the damn video. Okay, I've put the question up for you, so hopefully you've read it. The question says, and I can just turn over to my book here. So the question says, looking at here, it tells you that Key Lynch is a large listed company. It's UK based, and it wants to open a subsidiary in a country called Lanosia. Sorry, I keep saying company. It's a country called Lanosia. It seems that the Lanosian government is keen to promote pharmaceutical industry, blah, 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 and then it gives you some information about the country: politically stable, worldwide financial crisis, national debt. However, we think that it tells you employment levels are high, and capital assets, R&D, education and training has grown, interest rates are low, and then there's some various conditions that they're going to apply. Right, what they've done there is they've given you a nice little story. Now, the huge temptation, therefore, is to take your marker pen and in yellow highlight almost the entire thing, and then just to begin to write. Now, the first point I've got on the slide there is structure, and this is why this is absolutely critical, is that that's what you must not do. Because students will start to write a story, and it'll be a wonderful story, and then it'll begin to drift and wander, and it just becomes hugely difficult to follow, and for the marker, hugely difficult to mark. Entertaining to read, of course, but difficult to mark. So therefore, what you have to do is you have to find some kind of a structure. And then within that structure, make sure that you get a plan down on paper. So get it in a form that you've got something down on paper that a marker can see, and can see that you're going in the right direction. Now, when I looked at this question, I never read the answers for these things. I don't know what's in the answer. But I chose SWOT analysis. Now, if you don't like SWOT analysis, if you want to do something else, that's absolutely fine. Now, the question does particularly ask you to say what are the key risks and issues as well. I haven't looked at the answer, but certainly with that, if it says issues, there's nothing there that says they have to be negative. So key risks you'll have to identify. You identify those risks, but that will come under your weaknesses and your threats, and strengths and opportunities are there as well. So have a structure. If you don't like my structure, then do something else. There's pest analysis or whatever you want. But make sure you get that structure, because if you don't get that structure, you're going to do this swingy swangly long story, and it'll be hugely interesting. But your 10 minutes, 15 minutes that you've got left over, bearing in mind this is supposed to be 30 minutes for this question, that you're going to just waste your time and you're going to lose a whole stack of marks. So whatever you do and whatever feels best for you. So if you're watching this, well, I don't think it should be SWOT, I think it should be something else. Then do the something else. But have that structure that it fits into a framework. You know, if you're really short of money, then just do the opportunities and the threats if that's where you think the emphasis of the question is. So therefore, it says use SWOT for example. So you use whichever method you want. I used SWOT when I did this. And if I did SWOT, it really didn't take me very long. It says set out your page. So do some sort of a framework skeleton on the page. Get something down for parts A and part B as well. Because you know you've got 15 minutes to go. The woman from the British Embassy or wherever is going to come around and take your script away. If there's nothing on the page, you get nothing. So you don't have too much time to think. So get some thoughts down on paper. Bearing in mind as well, you know, my real profession is I'm not a teacher, I'm a consultant, so I work for the World Bank or whoever. When you're a consultant, you ask people, how could your company be better? And she goes, oh, it could be better if we do this. And you write it down and you give it back to them. Yeah. Right. And just because you're an external person and a consultant, the great thoughts that these people have suddenly have an added value to them. So taking chunks out of the question and putting them on the page, as long as they're meaningful, is a good way to get marks. It says there as well 15 marks. I think you know you're kind of looking for you're looking for 1 mark, which is point identification. But you're at paper P4. You're about to become a qualified chartered accountant, so they're looking for some kind of expansion and some kind of analysis of that point. So therefore, just writing, oh well, they're going to give me a grant. You know, if the marker's really looking hard to give you something, he'll give you a mark for that. But to get the real chunky good marks and to make it look a bit more professional, you need to expand it. So therefore, we can reduce the cost of our investment, which is like, you know, so stating the bleeding obvious, as Monty Python would say. But that's the kind of thing that you're doing. Okay. Right. Let's move on and have a look at the individual parts of the question. I did SWOT analysis, so we're going to do the 4 sections: strengths, weaknesses, opportunities, and threats. Okay, please before diving into this, make sure that you've read the question. Otherwise, these points aren't going to make much sense to you. So hit me on pause or go on, turn me off. I know you want to anyway. So turn me off or whatever you need to do. But make sure that you read the question and make sure you have an understanding of what's happening. So to further expand that, the basic scenario that we have is that this company, Killinich, is a UK company. So therefore, on that basis, if it's going to invest in the country, I forgot the damn name of the country now, Lanosia, then it's going to have done something which approximates to a net present value calculation. So it'll have done some sort of project appraisal, it will have some formal system. So let's just have a look then. As I said, I did strengths, weaknesses, opportunities, and threats. If you want to do something else, it's absolutely fine. You'll get just as many marks as me, but you must have a structure. You must not just have a blank piece of paper that you begin to cover with words. If you do that, it will just come over as you know, a random fairy story you made up on the bus. So in terms of your strengths, therefore, it tells us that we've got government grants and we've got low tax. Right, government grants and low tax, absolutely fantastic. You need to expand them a bit. So if we have government grants, what do government grants mean? Well, government grants, therefore, they reduce our cost of investment. So we're making an assumption here, and you should have studied government grants. There are 2 basic types. There are several types, but there are employment grants, there are grants for capital investments, and then there are also things like loan guarantees. So you need to discover what type of grants are actually available, but on the grounds that they're just going to give you some cash. And it says here, if I read out of the question, where's my bit about government grants, corporate investment, I can't even find it now. Here we go, to purchasing local pharmaceutical products, so the second paragraph, providing government grants and reducing the industry's corporate tax rate. Right, if it doesn't say what they're reducing them from to, but it's possible, therefore, that you have a relatively low basis of tax with government grants. Therefore, we can look at, do we get grants for employing people? Do we get capital grants for buying machinery? Do we get loan guarantees if we need to borrow in local currency? Do we get government guarantees that we can exchange money from local currency into US dollars or euros now is going more popular. So, in terms of the points, point identification, we have government grants. Point small expansion. The government grants will reduce our costs. Bigger point expansion, this may mean that it's cheaper to employ people, it's cheaper to buy material, it's easier to get money out of the country, easier to borrow funds, depending on which ones we are. All of those things are strengths. Low tax, everybody loves low tax, so low tax is your point identification, your point expansion, therefore, so the free cash flow that we earn will be greater, and so that gives us more money to investment, repay loans, sling the money back to London or wherever, yeah? Right, so you've got those two things. And those two things are very, very obvious, very, very sensible. Notice this idea that we get point identification, point expansion. Point expansion is stating the bleeding obvious common sense. There is no massive hidden message in this. In real life, you'd obviously have a report that was 50 pages long. You don't have it here. Write it, move on. Right, the weaknesses. Well, the weaknesses is that it's a relatively poor country and it's in recession. So therefore, it does particularly tell you. So point identification, as we've called this, it tells us that growth in real wages has been negative over the past 3 years. The economy has shrunk in the past year, and inflation has remained higher than normal during this time. Right, so therefore, it tells us the national debt is growing. The country's national debt has grown substantially, following a bailout of its banks. Right, if the national debt has grown, therefore you've probably got austerity measures, you've got low wages. So if we're just looking at the banks, we can talk about availability of finance. The pharmaceutical industry is a fairly high cost manufacture process. We may need to borrow significant sums of money. If we're dependent on imports, we may need to bring those assets that we require in from abroad, which means we're purchasing in dollars or euros. The crux of all of that is that there simply may not be in the banking system enough money. If you go to the bank and ask to borrow $30 million, the bank may just go, no, we just don't have that many dollars. So therefore you may find that there is a shortage of available finance in the country. Right, national debt. So therefore, we have this idea of a shortage of finance. Right, the way therefore that we get around that is we try to tie that in with government grants. So if the banks don't have enough funds, then we go to the government and we say, well, what capital grants are available? How do we actually raise these funds? And remember, we're trying to keep it in the country. The country is called La Nosia. So within La Nosia, we're trying to raise the funds within that country. We don't want to be borrowing pounds in Britain, changing them into dollars, buying equipment, sending it to La Nosia and getting revenues in La Nosian dinars or whatever their currency is. So national debt, how do you fight against it? You go to the government, you ask the central bank to loan you money. Central bank will loan you more cheaply. If they won't loan you, then you ask for government guarantees. If you have government guarantees in place, then the banks can borrow in the offshore market, or you just ask the government to give you money, capital grants up front, give it to you, you exchange, and then you go abroad. Second weakness is low growth. Right, well, with low growth, the problem is that you're just not going to sell that many of your pills and tablets. If you're not going to sell that many of your pills and tablets, then there's two different ways to go. One is to go marketing to try and sell more. So we just try and sell more goods by using local advertising company tells us all about local culture, and we try and flog more of the things. The other thing, which is a bit more sensible, is to move back in the process. And when you're doing your net present value calculation, you'll do sensitivity analysis. So we do various net present value calculations, sensitivity analysis to show us how much can our sales fall by, or how much can the local currency weaken by, but before we move to negative net present value. Okay, we talked about strengths, weaknesses. You've got two weaknesses there. There's a huge national debt, bailout of the banks. That's your identification. Your simple point is, therefore, the funds may not be available to borrow. How do we deal with that? Now remember that the question did particularly ask about mitigation of risk. So how do we deal with that? Well, then we look at the government. We say to the government, you want us to build a manufacturing plant, now help us out. We need government guarantees, we need access to dollars, we need whatever we need. Money, just give us money. Giving us money is always a good one. Secondly, low growth. If you have low growth, you're talking about low sales. So what do you do with low sales? Start up your products, use local sportsmen to advertise them, blah, blah, blah. And also, your net present value do some sensitivity analysis. Okay, I've been talking for 7 minutes and 34 seconds. That was so much more than you need. Just common sense, bang, bang, bang. Maybe you're only trying to get 51%. You could easily have got that. Right, move on to the next slide. Okay, so we looked at strengths, weaknesses. Now let's look at the opportunities or threats. As I said at the start of this, if you've used a different structure, then that's absolutely fine. Your answer may take a different form. You get just as many marks as me. Right, the opportunities. You you have to be careful with opportunities for pharmaceutical countries. Bloody hell! Pharmaceutical companies investing in developing countries. Let me see if we get those two words right. Old age kicks in. If you can get those, oh Christ. You have to be careful talking about opportunities. Pharmaceutical companies have had lots and lots and lots of legal issues investing in developing countries, and they do this for various reasons. One is transfer pricing. So if you've got a low tax rate, remember we talked about Lanosia is going to have a low tax rate, so therefore we can pile our profits up in Lanosia and then not pay any tax on them. You have the inland revenue after that. But as a low wage country, Lanosia does offer you the bloody hell, I need to learn to talk, don't I? Lanosia offers you the opportunity, I'll say that slowly, to use as a manufacturing base, because if you've got low wages there, and you'll still have wages for packaging and maybe for research and so on, if they have a good education system, your opportunity is to move some of your research development and so on down there. So, point identification, it's a low wage country, expand that. It tells you in the question, we've got research and development down there, also low production costs. So currently we'll have to import everything, but maybe we can expand it in the future and find that they've got access to certain items down there. If the pharmaceutical industry is being pushed by the government, it may be therefore as well that there are other companies, got it right, operating down there who you can work together with. So you've got a good little base, like the sort of pharmaceutical equivalent of Silicon Valley. Right, point identification, low wage country, expansion of the point, that gives us the opportunity for research and development for production, and maybe moving some other functions down there as well. Finance, for example, might be a good place to put it. But finance department, that is, yeah, your accountants, for your group accountants. Right, the second opportunity therefore is alternate sources of finance. You get to go to the stock market, the Lanosian stock market. It's an alternative. What else? It may not affect, it tells you here that it's not going to be material, so borrowing funds down there will have zero effect on your debt capacity that you have in the debt markets back in London. So there's an opportunity therefore, and if the market's big enough and there are willing investors, when you have bigger general issues for the parent company, general issues being share issues, then it gives you access to new markets, gives you the opportunity to expand. So alternate sources of finance as well then. So alternate sources of finance, we can raise funds for this project without hitting our debt capacity back in London, so therefore we get more debt in our balance sheet without affecting cost of capital or anything like that. And you know how your examiner loves cost of capital. Please don't wander down the Modigliani and Miller route. That's enough that we've said there. Yeah. Okay, those are our opportunities. Now we've got our threats. Right, our threats. When a Western company opens an office in a foreign country, there's always the problems that come, the problems of management, the problems of culture. The other thing as well here is that it's government driven. So if I just look at the question, 40% of the equity shares must be held by the local population. 50% of the members on the board of directors, including the chairman, must be from that country. Right, that's a red flag. When you're investing in some of these countries, who those people will be who get those shares, whether it's going to be the Minister of Health's son-in-law buys all 40% at a heavily discounted price. I've seen that happen before. Whether the chairman is going to be appointed as a functionary of the government, because what your threat is here is that the government effectively controls your company and then they use your company for their own ends. If they are a good government, they will use them to promote the wealth, health and happiness of their citizens, if they are not such a good government, they will use it to promote the wealth, health and happiness of them and their bank managers. So you have a threat there. Right, the way to mitigate it with the shares, assuming that they'll permit you, is to offer them on the stock market and sell them to the general public. It doesn't anywhere in the question tell you what the population of this country is, but if the population is reasonably large and has a stock market, so it shouldn't be too bad, you can sell the shares around the general public. Everyone will buy their statutory 1% of the shares, and that shouldn't give you any issue that you wouldn't get with shareholders in any other country. We have rational investor theory and all this stuff. The board of directors is a little bit more serious because these guys are actually going to be able to dictate policy. So the way that you would do that, therefore, is that you would send a CV and you would ask the government to send you then a list of candidates who are acceptable to them, assuming that they have them, and then from that pool of candidates you would recruit. It tells you in the question that the country has a good education system, so therefore recruiting someone who's smart enough to do the job shouldn't hopefully be too big an issue. Your question is whether that guy comes with an agenda of his own and what's driving that agenda. So your point identification therefore here is government interference, and you could do this as 2 points. You could do one as the shareholding and one as the board of directors. I've just done it as one, government interference. For the shares, broad spread around the general population, 40%. You'd need to know what the stock exchange reporting requirements are as well. They may have some funny reporting requirements. As far as the board is concerned, you go to the government and you say, right, these are the qualifications that we require, and you make sure that it's circulated to Ministry of Health, Ministry of Education, Ministry of Finance, so that you don't get one minister who steps in and says, this is your guy. Yeah. And having said that, I've seen ministries in certain countries step in and go, this is your guy, and the guy's been really good actually. So it isn't necessarily a problem, but it can be a threat. Right, point identification. I've got government interference. We spread the shares around. It means your shareholders are no more of a risk than they are in Britain. Board. We set up a CV. We set up a panel. We would offer to recruit ourselves. You'll have to ask the government. They won't let you away with it. To nominate some people, and then you have to be careful about rejecting them. Yeah. Right, the second one I've put there is thin capitalization. This is an issue in almost every country in the world outside of Europe. Thin capitalization means that you're only allowed to structure your business in a certain way. The reason is very simple. But what used to happen in the good old days was that a British company would go to somewhere, let's call it Russia. They would open a company. The company was designed to import certain of their goods and maybe then improve them, whatever, and then sell them. When they did the capital structure, when they set up the capital structure of that business, they would set it up with one equity share and £10 million worth of debt. And then you set the debt at 20%. So that the rate of interest on the debt is 20%. Right, and the reason that you do it, therefore, is that all of the profit that the subsidiary makes in that country becomes tax-deductible debt, and then it gets whacked out the country as an expense. So that the local government get nothing. I mean, okay, you're getting people employed, but the manager of the plant and the senior management all come from Britain. All of the profits that they make, which comes from Russian people with their salaries, gets whacked back to Britain. The government just won't let you do that. So they have this idea of thin capitalization. And thin capitalization sets what proportion of your capital is allowable to be debt. In particularly aggressive countries, they will do this and actually set it as your capital structure. So this is your maximum amount of debt by market values. In less aggressive countries, they simply do it for tax reasons. So you can claim all of these, you can claim this interest, you can send it abroad, but they will set a very low maximum on the amount of debt interest that you can claim as a tax deduction. So it will be non-deductible expense in your tax, or most of it will be a non-deductible expense. So you end up paying tax anyway, and that's how the government gets its cash back. Right, in this country, it says here 40% of the equity capital. Right, it doesn't say here whether or not there are any limits on this, but this is something you would have to find out, because there almost certainly would be in real life. Okay, point identification is capital structure. paper P4, your examiner loves this. Your point expansion is that most developing countries will not allow you to fund the thing wholly through debt. And the question does actually say that you're not going to do that anyway. But you want to find out whether there's some legal restriction on what your debt capacity is or not. Okay, there you go, 10 minutes. That's quite good, I enjoyed that. Okay, before we get into this, you should now have part A on your piece of paper. So part A, therefore, should have some structure to it, and I would write these things as glorified bullet points as well. So point identity, you use this table, point identification, point expansion, and you know, if you've got, it's 15 marks, if you've just got 4 points and 4 expansions, that's 8 marks, and you've passed in terms of the fact that you've got 51%. So in terms of approaching this really well, doing it really quickly and getting quickly up to those 50%, it's actually quite an easy question. Going over kind of 60-65% of the marks becomes harder, yeah? If you have a question which is numbers based, it can be right or wrong. So you get it completely right, you get 100%. Screw it up, you get nothing. With an essay question, as long as you write something, it's almost impossible to get nothing. Getting over that barrier of 60-70% is almost impossible, because that you wrote the perfect essay. Examiners' brains don't work like that. Right, that's part A. Right, now have a look at part B. Part B tells us, I suppose I should read it myself, part B tells us that the directors of Killinech have learnt that a sizable number of equity trades are conducted using dark pool trading systems. Right. Virtually no one who sat this exam will have any idea whatsoever that dark pool trading systems are. That has 2 effects. The first thing is that people therefore will not do this question because they think I can't do that. It completely ignoring the fact that 75% of the marks are really quite easy to get. So please, first of all, if you see something like this and it asks you, explain how police radar systems in the state of Indiana work, then don't just ignore the other part of the question. If you're going into a question with 10 or 15 minutes, it's just all about maximizing the rate at which you're earning marks in those last 10 or 15 minutes. Secondly, therefore, almost no one will have done this. Even people who've done the question won't have done part B. So have a guess. Just guess. If you get it hopelessly wrong, dark pool trading systems are done in offshore zones where it's dark 6 months of the year. I mean, you'll get nothing for it because it's a stupid answer, but you've lost nothing because you didn't know what the bloody thing was anyway. So what I want you to learn from this is just how to use your common sense. And I can't teach you to use common sense, but just have a go. What does it look like? What does it sound like? Write something. If you write something and it's reasonably sensible, then you're going to get marks. So what does it sound like? Dark pool trading. Well, it kind of sounds like it's off-market and it's anonymous. There you go. So it's an off-market system and it's anonymous. There you go. And it is. That's exactly what it is. You're only looking for 5 marks. You probably get a couple of marks for that. I don't think it's enough to pass, but you get a couple of marks. And the second part says, how does it affect the IPO? Well, if you're doing trades off-market, it'll make people suspicious so they will want to buy your shares. Yeah, maybe. Could be. That is probably almost enough to pass. Write that out in 3 sentences and you're well on your way to getting close to an answer, okay? Because so few people will have done this that the marker will be astonished to find that he's sitting there with 400 scripts and he's probably up to number 200 when he gets to you, and you're the first or second person who's done this. There will always be a couple of people who actually know exactly what it is and they write the perfect answer. He's probably kept that to the side just in case someone else answers it because it's the best way for him to learn it. Right. Common sense. Write something. You must write something. Write something in common sense. What are they? Have a guess. How will they affect the IPO? It'll depend what you've written. Right. What are they? So let's go on to what they actually are now. Dark pool trading systems are systems that are used off market. They're used off markets exactly as the name suggests because they're used by institutions. So major investment houses that hold blocks of tens of millions of shares in pharmaceutical companies will keep them off market. They keep them off market because if you suddenly go, boom, I want to sell 50% of these shares, but bearing in mind that the actions of an institution have a signalling method, but they have a signalling effect. So if a major institution decides that we want to move out of pharmaceuticals in general, we own a lot of shares in Eli Lilly, and we dump a bunch of those shares, the market may interpret that as there are concerns and something bad may be coming from Eli Lilly, so the share price will go down. That is not the intention of this. So the intention, therefore, is that these shares are bought and sold on the side in non-transparent transactions for the simple reason that it doesn't adversely affect the share price on the market. Right, that's the clean side of the story. The dark side of the story is that they know that something's coming and they want to get rid of the shares, and they want to get rid of the shares before that bad thing happens. So they are considered to be suspicious. There's various other things that happen as well. Organizations that work on what we call multi-trades, or the high-speed trading systems, will send out a quote and then they cancel it. Send a quote and cancel it. The reason that you do that is you're looking to see who's going to pick up your quotes. And what they will try to do is to buy them and sell them, and they can do it in a fraction of a second. So we get these organizations that are trying to do that. Right, in terms of answering the question, you're going to get enough to pass if you know what they are. It's an off-market trading system that allows institutions to buy and sell large blocks of shares without communicating, signaling to the market some kind of false information. So that's the good side of what they are. So that's what you need to know for the exam. Right, how will they affect your IPO? Well, the question is that nobody knows. If this is normal practice in the country, and it's normal practice in America, I think America has something like 45 of these different pools. So within the pools, there's various different ones that are offered by various brokers and various people who buy huge blocks of shares and then break them up and sell them themselves. So there's something like 45 of these markets out there. Who knows what the effect will be? You could say that on the good side, that it won't have any effect at all. You're an unknown company, so it's a good way of getting a good price. Other things, if people know that this is going on, and in general they don't, but if they know that this is going on, then it could have an adverse effect on your share price. The question simply says that 40% of the equity share capital must be held by the local population. It doesn't give you a definition of what local population is as well. So in fact, what you could do with your shares is you could place your shares. So you have an off-market placing. So you sell a block of shares. Now that would constitute a dark pool transaction. So you would sell a block of equity shares to an institution in the country, and then if that institution, if that bank is well trusted, which doesn't sound like it will be, if there's been a bailout, but if that bank is well trusted by the local people, then the bank will sell in its name blocks of shares, and that will make the shares more marketable to the local population. Right, you needed to guess at this. What is it? It's an off-market trading system where institutions sell large blocks of shares, and it's not transparent. It's not transparent so that it doesn't send false signals to the market. How will it affect the IPO? Think of something that says common sense. The good things are you get to sell the shares. The good things are if it's normal, no one cares. The bad things are you may be seen to be working with the institutions against shareholders. You may be seen to be avoiding transparency. You may be seen in some way to be tricking or fooling the local people because they don't trust the bank. Common sense is the most important thing. Common sense and logic. Okay, that was a look at a part B question. I come back to what I said at the very, very start. By far the most important thing with this is that you have a structured approach to this. You are probably going to be going into this question when you are short of time. Therefore, get short bullet points down on the piece of paper and then expand them. One bullet point, one expansion, one bullet point, one expansion. If you do that, and you're doing this in the last 15-20 minutes of the exam, it's actually really quite easy to get 50% or close to 50%. Getting over 60 becomes harder. It's kind of a curve. Yeah? Best of luck with the exams. you have any questions, let me know.